Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. Today we're talking about the Meta earnings call, what the hell this disaster this quarter was, and why I couldn't resist but buying more. I'm retarded, but I can't help it. That's what I'm doing right now. There's a nice little tidbit too. You got to hear this exchange between a kind of analyst and Mark Zuckerberg at the end of the earnings call. So stay tuned until the end of the video because we'll talk about it then.
We're also going to listen to Kramer cry. But let's get started.
Two stupid guys trade stocks.
All right.
Say it was such a big topic this week that we even had our main man Michael Burry coming out here and talking about Zuckerberg in a tweet.
Yes, it is also quite an interesting tweet. Let's take a look. It is interesting. Look, I'll let it go.
Yeah. Yeah. I just called him out as Autism Spectrum Disorder. That's ASD. FLK, I know is funny looking kid. I'm not really sure if there's another meaning for that, but that's the one I know. So he talks about how he's getting it, how he's just wholesale focused on, pursuing a vision, whether or not it's the wise thing to do and that it pains others. But I think people are missing a lot of nuance here. And as we kind of get through the earnings call, like my notes a little bit about it, you're going to see that there's a lot more going on than just the metaverse. And it's actually a bigger story, I think, than the metaverse.
Ooh, didn't know that. I'm excited because I just thought he was just tanking the metaverse. I still believe metaverse is going to be huge here.
Potential. All right. So, this is from their kind of presentation that they put out with their earnings here. In terms of like their advertising, this top line here, it's honestly relatively flat over the last several years. And that's kind of surprising, despite the fact that we've had some massive, booms in the economy. And then also you have this Apple IDFA thing where it's substantially hurt them. They talk about a $10 billion headwind per year. The fact that they've been able to kind of maintain flatness here is hiding a lot of the revolution I think that's going on within their advertising segment. We're going to talk a little bit about some of the questions about that and what they got into as far as like details.
Not to
Um,
mention, Google and Snap did not do well advertising. So this is kind of impressive.
yes. Yeah. I'm okay. I'm willing to get it. You're going to like some of the stuff that's in here as far as what we're talking about. This other segment is the reality labs, right? This is that metaverse play. Doesn't generate a whole lot of revenue right now. In fact, and it's costing them a whole lot of R&D money. The R&D has exploded in terms of a portion of the revenue, but it's a longer term time horizon. You're talking about many years out. They are making some progress in it. Whether or not it's progress towards an actual ultimate financial reward is a different question, but they are making progress with that money. Okay.
Okay. All right.
So when you look at the expenses as a percentage of revenue, we can really kind of notice here is all of a sudden look at R and D as a segment here. It just explodes from 20% all the way up to 33% as of now.
Yeah,
Yeah.
that's generally not. You want the graph to be going the other way. You want it to
Uh,
be a cheaper percentage of revenue.
I guess. R&D is required for them to reinvest into their core business, right, to maintain the competitive advantage and maintain the market share at the very minimum. Never mind, hopefully, growing it. The problem that this doesn't really kind of show you is that this R&D, although a portion of it's being driven by the metaverse, and that's the headline story as far as like where all this money is going, I don't think that's actually truly representing what they're doing. They're spending a lot of CAPEX money, but most of that is focused on AI build out as they're trying to get past this Apple IDFA change and now having to have better kind of ad targeting without that tool. That's what they're spending a lot of this money on.
Okay. Their general and administrative also went up 2%, which I know it's not much, but when you go from 10 to 12, I mean that's 20%. So
Yeah, and they attribute that to headcounts. That's what they're talking about. Net income not good. This is quite a downward trend right here. Over the last year,
looks
basically,
like
you're talking
Baba.
about halving. Yes. Apparently, I like all the dog crap stocks. So we can call that. We can just channel name the dog crap investing. That's fine. Um, and you're seeing the capex just explode here, right? Like I said, the headline news stories, people are just talking about it being, metaverse, and that's part of it, but that's not the entirety. Okay. The one kind of shining light through here, and like it doesn't get a lot of attention at this point in time, which is kind of ironic, because if you're like a pre-revenue company and you're growing your user base,
That's all people care
the
about.
people. That's all people care about. Yeah,
Yeah.
exactly. Right. The fact that they have 3 billion people using their app basically on a daily basis, or one of their apps, no one cares about.
Yeah, that's weird. It's also, I'm surprised it's still growing. That's actually a decent jump.
Yeah, yeah, and same thing with the monthly numbers. Monthly active users. They're both still growing, which is kind of surprising. Even more so, Zuckerberg talked about how not only are they getting more people using, coming back to the app as far as like daily to monthly active users, they're actually getting a higher portion of people's time. People are spending more and more time on the apps, and that they don't flatly know, but they believe they're kind of making inroads towards TikTok's like market dominance, particularly with the Instagram Reels. They're going to talk about the monetizing of that too. That's one of my notes. Now, this slide is by far and away the most abysmal thing on here, right?
This is what made Kramer cry.
Well, I mean, it should. A company of Meta's
Oh.
size generating $173 million of free cash flow, that's just not going to cut it there. But you're talking about $9-10 billion a quarter before, to drop off this significantly is painful. Okay.
That is
Painful.
terrifying. That is a crazy accelerated price. That's over, what, 8 quarters? 12 billion to 173 million.
Exactly. That is bad. They deserve to get partly beaten up in stock price for this. I completely, understand that. You're seeing this kind of purchase of like this CAPEX investment line just exploding, right? Doubling basically over that time period. As headcount has also gone up, so that the amount of cash they're actually generating from their operating activities has gone down, become less profitable on the kind of top line there.
By the way, I said
So,
12 quarters. It's 7. That's my bad. Bad math.
yeah.
Two stupid guys.
Yeah, I know, right? So these are some of my notes from listening to the earnings call, and I highly recommend you take the hour or so to do it. It's worth it if you're going to invest in Meta stock. Okay, so they talk about 3 areas of growth, right? They have the whole AI engine to power Reels. They have this business messaging app, and they also have the Metaverse, right? So really, Metaverse is only part of the story here. With sucking up their cash flows, they have 3 areas they're trying to grow at once. Right? In terms of the Reels AI, which is driving a large portion of their capex, right? They don't exactly break it out and tell you, but there's another comment in the next slide. Well, I'll tell you a little bit more about that. But very quickly, so this is like, think about this. Last quarter, they said they're at a $1 billion annual run rate for the ads from Reels. This quarter, they're at a $3 billion annual run rate.
Wait, mean they made 3 billion in 1 quarter?
No, they're saying that they're generating that much in top line revenue from that. That the actual revenue growth was 200% in 1
Wait,
quarter.
that's fantastic. Why is that bad?
That is fantastic. That's my point.
I was
This is getting hidden.
Here.
Yeah. So
okay, I was like, that sounds great. I don't.
Yeah, exactly. If this was some little dinky podunk startup that just did 200% quarter over quarter growth on one of their products, what would the stock price be? Going parabolic.
Give Vinny a thumbs up and a like and subscribe if you did not know that, because I did not know that. That was not in any of the articles that I had read prior to this.
Yes, this is definitely. I think I'm getting more and more excited about this, because I think this is somewhere where the market is completely missing the story that's really going on within Meta. All right, so the plays of the Instagram Reel up 50% over 6 months. 50% growth in 6 months, and the gaining timeshare on TikTok is what they believe. Obviously, they don't have TikTok's data, but they believe they are.
Yeah, TikTok also keeps it running into problems. I don't think they're going to be here in a year.
I don't know. Who knows, right? And then they talked about increasing user engagement and time spent. That they actually have data that they are getting more kind of eyes on a regular basis, and when people are on, they're actually spending more time on the platform.
Okay.
Right? This is one that I'm in part responsible for. 1 billion real shares per day on Instagram alone. That's when you click on that little triangle in the corner and send it to someone. Dylan and I go back and forth occasionally with these.
Yeah, we do that all the time. Okay.
I send like 40 of these to my wife like a day. She absolutely hates it, but it's hilarious. Just think about that level of engagement, and that's something that can you do that on TikTok? I honestly don't know.
I refuse to download TikTok because the user agreement's horrible. So I don't know. Someone in the comments, please, if you know this answer, throw it in there.
Yeah. So the social network effect of having the reels combined with like your actual like friends and family being on this app, I think are very powerful. It's going to create and drive more and more engagement over time. The other thing they talked about was this business messaging. So they're growing it on both WhatsApp and through like Instagram. And the basic idea is that you'll be able to directly message them, purchase a product from a business. Right? They said that this business is already at a $9 billion per year revenue run rate. I want to say they said that they gave a number for the WhatsApp portion of it too. I can't exactly remember what that was. It was like 1.5 billion, something like that. But they were talking about how quickly that is growing. So other parts of the world where people use WhatsApp a lot more than we do here in the U.S. That is going to be a major point of contact between potential customers and businesses. So I think it's a huge market, and they're uniquely positioned to tap into that.
So basically, they're getting a bigger hose and a bigger bucket, right? They're getting more and
Yes.
more growing opportunities, but they're also hemorrhaging more and more cash in other areas.
Okay, yeah, exactly. The majority of their investments are going towards this sort of stuff in the business where you're getting real returns.
Yeah.
This isn't like all entirely a moonshot in the metaverse. This
There's,
is the real business lines that are being used on a daily basis that are generating billions of dollars a year in revenue.
which if you look up just like Meta earnings call, that's not what people are saying. So that's just, some guy wanted clicks.
Yeah, and you'll see that the very tone of all the analysts basically don't really get this. They don't care. They're just like, Mark, what are you doing? You're going to see this audio recording here in a minute, all right? The other thing that he kind of tipped his hand at is they told us 2023 is going to be basically a mess. They're still accelerating. They already hired a bunch of people that are going to be working on both the AI generation and the Reality Labs portion, and they're not backing out those commitments. Those people are still coming on board, but they expect to keep their head count in terms of number of people working at Meta roughly flat over the next year. So it's going to expand a little bit in the early part of the year, and then flatten out at that point. All right. But like after 2023, this is what Zuckerberg's plan is right now. Is that's when they're going to start pacing the investments. What does that mean when I say pace investments? What does that mean to you?
Slowing down?
Exactly. They're going to pace
Being
them
more.
along with their growth.
Okay.
Right.
All right. So
So
if they don't grow as much as they're hoping, they'll invest a little bit less than they were planning. Okay.
Exactly. So once you start getting to 2024, as long as their plan actually happens, and obviously there's a lot of macro stuff that'll be changing at that point too, that's when you can really start to see the earnings reaccelerate is what we're hoping for. They're even hoping for some revenue growth actually next year, despite like the challenging economic times.
Okay.
All right. I went through some of the questions here a little bit. So, first question basically comes right out of the gate with lots of CAPEX. What's the return on investment in this AI that you're putting all this money into? And his answer, I don't remember which one answered, if it's Mark or one of the people from his team, but they said that they saw a 15% gain in watch time. For the reels, basically. Yeah.
Okay. Yeah.
So getting real return on investment. Then the other thing we talked about too is like someone actually commented in our last video talking about ad targeting and how Meta's junk now without IDFA.
You see that a lot
So
on Reddit.
no, I get it. I get it. Like, I don't purchase ads for a living. And like, yeah, I mean, that's very true. It's hard to argue with Google as far as ad targeting. But this new AI has also kind of shown some fruit in that realm. So in terms of ad targeting, they asked them, like, do you have anything to kind of demonstrate ad effectiveness to us? And they were like, this Advantage Plus program we have, they saw a 32% increase in return on ad spend for one of their clients by using that AI ad targeting that they built out.
Okay.
Decent, right?
Yeah.
And then this is the final question that I want to play the audio for. There was just like too many experimental bets. What's the story here? So I'll let this one go and we'll talk about it after. It's going to be a couple minutes.
I think kind of summing up how investors are feeling right now is that there are just too many experimental bets versus proven bets on the core. And I'm curious if you can just add more color why you don't feel these are experimental. You feel like they pay off. There's obviously a lot of focus on the investment side, and I think everyone would love to hear why you think this pays off.
And let me take at least part of that. I mean, we're making a number of investments across the portfolio. Marnie outlined some that we're making in the ad space. Obviously, the investments that we're making in product areas like Reels and the business messaging platform at WhatsApp are ones that we think will have a significant payoff in business, both in terms of engagement and monetization. So we're making a wide portfolio of bets. Still the majority of our spending is directed towards our family of apps investment, and those are across both engagement and monetization. leveraging AI in many cases, and we're making good progress on those fronts, and then leveraging as well what is today a fairly under-monetized resource in terms of our messaging platforms, building more scale around those as being a source of future revenue growth. We've already proven it out with our business, our click to message ads with a $9 billion business today, but we think we can build a substantial size business around paid messaging, which will complement that as well. So I think we've got a lot of bets across the family of apps portfolio, in addition to the work that we're doing on Reality Labs and the Metaverse.
Here comes Mark.
Oh, is he coming on right now?
Yeah, I mean, I just say that there's a difference between something being experimental and not knowing how good it's going to end up being. But I think a lot of the things that we're working on across the family of apps we're quite confident that they're going to work and be good. The Reels work, the Discovery Engine work, all the ads work on Signals, the business messaging work. We can't tell you right now how big they're going to scale to be. But I think that each of these things are kind of going in the right direction. Obviously the Metaverse work is a longer term set of efforts that we're working on. But I don't know. I think that is going to end up working too. So, yeah, I think that there are a number of different. There are a lot of things going on right now in the business and in the world, and so it's hard to have like a simple, we're going to do this one thing and that's going to solve all the issues. I mean, there's macroeconomic issues. There's a lot of competition.
This is a good answer.
Ads challenges, especially coming from Apple, and then there's some of the longer term things that we're taking on expenses because we believe that they're going to provide greater returns over time. And I think we're going to resolve each of these things over different periods of time. And I appreciate the patience, and I think that those who are patient and invest with us will end up being rewarded.
Just adding to what Mark just said,
Good?
it is a challenging time for advertisers.
Yeah.
All right.
Yeah, that's basically what I wanted to get at. I thought that question was very much like in your face, a little punchy, and like I thought that
he handled that very well.
He had to chime in. Like you could tell, like he just, they talked a little bit about how he was almost like kind of snarky, and like to a degree, like Facebook and Meta need to do a much better job of explaining this to investors, and they haven't been. They haven't even given us an exact number on how much of this CAPEX is Reality Labs versus AI. They just keep saying it's much more related to the family of apps business than it is Reality Labs, which I have to no other choice but to agree with what they're saying. I don't have anything to disagree with that, but that's what I'm really trying to get at.
It is interesting because you see, if you talk to people, it'd be like, well, Facebook's dead, their ad business is dead, Apple killed them. But then you see the revenue, it's like, well, no, it's not. So listening to that and seeing this presentation, here's Kramer. This is only 50 seconds. This is in stark contrast to what I think he just saw the free cash flow number and just freaked out. This is essentially what happened.
Yeah, let me say this about this. I made a mistake here. I was wrong. I trusted this management team. That was ill-advised.
This is after he said go along.
You were serious, extraordinary. And I apologize.
Okay. What did you get wrong?
I had a belief that there was a recognition that there is a amount that you can't spend. Contrast that, for instance, with Jim Farley, who took a project that was his, Argo, and closed it because it was not ready. It was not near enough. This situation is almost a rogue situation. I had thought there would be an understanding that you just can't spend and spend right through your free cash flow. That there had to be some level of discipline, and I didn't get it. But David, what did I get wrong? I trusted them, not myself. For that,
He just keeps on kind of going on from there.
He needs to be put on a 24-hour psych hold the way he sounded there too, by the way.
Yeah, no, I feel bad. I don't want to see someone like that sad. But he just goes on. He's like, you know what, guys, this is on me. I completely made a mistake. Trash company. So,
yeah,
pretty wild.
I get it. The one last comment here. This is from the follow-up call. They do want another one like the day after their earnings, basically, to wrap up any other questions, that sort of thing. But this is, I forget exactly who the person was that was speaking at this point, but they just basically talked about how, CAPEX budget is really supporting Reality Labs. So really the overwhelming lion's share of CAPEX investments are supporting the film of apps at this point. I think that's the part that's really being missed here, is that yes, there is this moonshot, and they're spending a lot of money on it. You're talking about $4 billion a year, but $4 billion a year compared to, even right now at their reduced capacity as far as profit-wise, you're still talking about, what's that, 4 out of 20, like 20%, something like that. It's not a significant portion that's going only to the metaverse. A lot of this is going to things that are probably pay off much, much sooner than the metaverse.
A lot of this is also going to combat what Apple did, and it looks like it's paying off, because I did not see, that's why I was very excited for this video. I didn't see any of this stuff first, right? And when I saw the ad revenue, I was expecting like 30% less or something from what you're reading on everyone on YouTube. Like just on our Meta comments on our videos. Meta's dead. It's over. They have no ad revenue. Well, no. It's just factually inaccurate. So that's crazy.
Yeah, I right now, I mean, I feel more optimistic about Meta than I do about pretty much anything else that I own or looked at in the so you're talking about a company that, this assumes a lot, but you're talking about $280 billion market cap now.
Wow.
You're talking about a company that, earned $40 billion in earnings a couple years ago.
Yeah. All right. Okay. Well, that is quite the bold statement. Thought would have been intel. Guys, if you enjoyed that and you learned something new, give us a like and subscribe. It really does help. And have a good one.
Catch you next one.